On Business Incorporated today. Ghana set for IMF deal in February. South Africa electricity regulator approves 18.65 price hike from April. And Zambia economy grew by 3.1% in 2022. It's the final one for the week. Good afternoon. Welcome to Business Incorporated. I'm Ini John Mekwa. We dive right into the market numbers. Glad to say Nigeria's NGX is sustaining that bullish trend it's been having for a couple of days now and building on that 52,000 level. Looking at the numbers now, we see it's at 52,141.47, and that's up at intraday 0.18%. Looking forward to a bigger number at the close of trade. South Africa is also up much more than that, 0.80% at 79,253.12. We look at other parts of the continent now. Egypt is also in the green, 0.15% at 15,551.47. Kenya closed yesterday again, negative 0.83%, recording some losses in the last couple of days. Over to the Middle East now, where markets in the United Arab Emirates are closed on Friday, but they ended positive on Thursday. There you have it, Abu Dhabi in the green, 0.56%. Dubai also in the green, 0.32%. Now we look at those who were trading today. Saudi Arabia, 1.19% in the positive, and Qatar is in the negative, 2.52%. Let's go to Europe now. There's a major discovery, rare earth elements deposit in Sweden, and Europe is currently totally reliant on China for these essential metals. Will this make a difference? Well, thank God we have Rob Watts now joining us from Berlin. Hi, Rob. Good afternoon. Do we say congratulations? And I hope that potentially this important discovery will deal with some of those needs that have been connected to China.
Well, it's a really big deal for Europe. The people who found this deposit estimate it contains over 1 million tons of rare earth elements. That puts it at a similar size to the biggest deposit in the United States, for example. However, it is still significantly smaller than the deposits being mined in China, which dominates the global rare earth market. It mines 2/3 of the world's rare earths and processes most of the rest of them. But this discovery inside the Arctic Circle in Sweden does give Europe the opportunity to have its own supply of the rare earths that it needs for future technologies like wind turbines and electric cars, not to mention also smartphones, earphones, lasers, the demand for which is only rising. The EU has learnt recently the hard way that it doesn't pay to be reliant on countries whose ideals do not align with your own. They've been burned because of their dependence on Russia for energy, and this rare earth find could give an opportunity to reduce just such a reliance that it has with China and rare earths.
Yeah, well, sounds like a good deal, but unfortunately it seems reaction is not always positive. What are you hearing about the reactions?
Well, it's going to raise concern in environmentalist circles for sure. Rare earths are notoriously difficult to get out of the ground, and extracting them could be a very dirty business. That's why much of the world is just happy to let China do the dirty work. In China, rare earth mining has created vast wastelands, it's contaminated waterways, it's been blamed for high cancer rates in communities surrounding the mines. So the idea of that taking place in Europe, and particularly in the sensitive Arctic Circle, is one that will worry many people here. However, regulations in Europe are much more strict than they are in China, and the discoverers of this deposit insist that it can be mined safely. There are ways to do it that are much less damaging than some of the methods used in China. One of the big challenges, though, for the people hoping to exploit these reserves in Sweden is to cut through all the red tape and make the case for rare earth mining in Europe. That could take some time. Indeed, mining is unlikely to begin within the next decade.
Yeah, so I guess the big question is, will necessity take over environmental concerns? But anyway, let's head to the market now, see how it's doing this last trading day.
Off Friday on a strong footing thanks to the inflation data from the US that I mentioned yesterday, which was on its way. The data suggests that the Federal Reserve's aggressive program of rates rises has had the desired effect, and therefore we could see a ramping down of those rises, and that's something that's pleased markets over and over again, that prospect. European markets are ending the week at 9-month highs, but a round of economic data from here in Germany, France, Spain, and the UK could all move the needle before the close of play. Much of Europe is expecting to enter a recession at some point this year, and the GDP data that we're getting from these various countries on Friday may give an indication of how deep those recessions are actually going to be. We're also going to get data on industrial production in the Eurozone. We'll see if that dampens what continues to be an overall upbeat start to 2023.
All right, Rob, we have a lot to look forward to next week. Thank you so much and have a great weekend. Let's move over to the UK now, talking about data. Good afternoon, Juliana. Well, this morning you spoke about the GDP, which was positive with Laddie Williams. But now let's see how investors and the markets are reacting. I'm sure you have a lot of reactions following that data that came out early today.
That's right. Good afternoon. Any mixed reactions? As you said, I discussed this already this morning with Laddie on Business Morning. In case you missed it, it does appear that despite all of the negative forecasts we received from public bodies such as the Bank of England, the International Monetary Fund, the World Bank, even the government's own Office for Budget Responsibility, saying that we will be in a recession this year, it does appear as if we have managed to skip out of it technically, and that's because there was a surprising growth in the economy during the month of November. It grew 0.1%, so just slightly, and this follows a 0.6% rise in October. Looking at the slew of data we've had this week and last week, particularly from retailers Tesco, Marks and Spencer's, Next, Morrisons, Sainsbury's, all showing decent growth in the month of December, it does appear as if perhaps we are not in a recession. That doesn't obviously reflect well, because of course, if you're living in the UK, data means nothing to you. What means something to you is how much you're paying for bills at the end of the month and how much your coffee costs. So things are mixed, which is why we've had positive responses from the Chancellor and the Prime Minister, of course, but still a word, an air of caution from business leaders who are still waiting to see whether or not their bills are going to rise in April when the support system stops. And of course, investment confidence pretty low at the moment. But it does appear as if we are going to be going into the weekend on a positive note, because the all-share at intraday is up 0.41%. FTSE 100 up to 0.43%, and the FTSE 250, the domestic market, that's up by 0.41%. Within the currencies market, the British pound is trading down at intraday against the US dollar by 0.08%, down 2 against the euro by 0.30%, and down on the Japanese yen also at 0.48%, reflecting that lift on the internationally focused blue chip index.
Well, at least we have a little bit of good news, Juliana. But this issue with Brexit, it seems we can't, I don't know, would this be the end of it? We hear the EU and the UK are getting close to the final stage of the post-Brexit deal?
To be blunt, I don't think Brexit is ever going to end. It's a never-ending political, economic, family drama that continues. Even, it's been nearly 6 years since we've had that Brexit referendum. 7 years now. It'll be 7 years in the summer. But there was a little bit of a glimmer of hope, because during the week, James Cleverly, who's the Foreign Secretary, he travelled to Belfast to meet with leaders there, as well as other senior figures within the EU, talking about the issue of concern, which is the Northern Ireland Protocol. Now, the Northern Ireland region is the only country within the United Kingdom that shares a border with an EU member, that being Ireland. In the south, of course, it's been very well noted in history that there have been significant tensions on that border for hundreds of years, and the fact that the Northern Ireland Unionists feel betrayed by the British government, because rather than there being a border on the island of Ireland. There's a border down that middle bit you see between the United Kingdom and Northern Ireland. So unionists feel that they've been betrayed, that they're no longer part of the UK. So what was unveiled earlier this week between the UK and the EU was this new technological infrastructure, which would allow goods to pass from the UK, the rest of the UK, into Northern Ireland without there being such checks physically, which of course causes bureaucracy. It takes a lot of time, wastes a lot of money. So we're almost there, but we're not there yet. And I think the British government, they released a statement shortly after Wednesday's visit saying that, we're not in the final straits yet, but certainly this is a significant way forward. But I think we're going to be talking about Brexit, me and you, for years to come, possibly.
Yeah, we're here. We'll talk about it and follow this update, Juliana. Thank you so much and have a great weekend.
You too. Thank you.
All right, let's move from the UK now, where Asia-Pacific shares traded mostly higher after the U.S. Consumer Price Index showed inflation cooled in December, raising investors' hopes that the Federal Reserve can return to slower interest rate. Let's look at the numbers from Asia. The Nikkei 225 in the red, very close to 2% at 1.78%, and that's 26,119.52. The Shanghai Composite, however, flipped more than 1% at 3,195.31. The Hang Seng also in the positive, 1.04%, 21,738.66. And we have the Kospi also in the green, looking good actually at almost 1%. And from Australia, we have the AX 200, also 0.66% in the positive. That's for Asia. In the United States now, we see that stock futures were flat in early pre-market trading on Friday as investors braced for big bank earnings to commence. Futures tied to the Dow Jones Industrial Average rose just 9 points. There we have the numbers there. Dow Jones up 0.05%. However, the others, S&P 500 in the red, the Nasdaq also in the red, 0.21. But let's, yesterday was a big day for the United States. We had that inflation figures. So let's have the details of how the market traded with Maria Bird, who is our correspondent in Washington, D.C.
The U.S. stock market edged up on Thursday as the Dow Jones was up by 0.6%, the S&P 500 up by 0.3%, and the heavy-tech Nasdaq up by 0.6%. It is clear that many investors are also watching to see what the Federal Reserve does, as Chairman Powell is indicating that there will be an increase in interest rate hikes over the next few months, as inflation continues to rise in the U.S. But this is not having a dramatic impact on the U.S. stock market, just a bit of a slowing down, what many are calling a slow session. It is also clear that the jobless claims are also helping the U.S. stock market, as jobless claims are far less than were expected for this month. This is another sign that the U.S. stock market might continue to be on an upward swing for the first quarter of 2023.
All right, upward swing, good perspective and positive sentiments. We do hope it's sustained. Let's move to the global market now. Oil prices slipped in early trade on Friday, but we're on track for gains of more than 6% for the week on solid signs of demand growth in top crude oil importer China and expectations of less aggressive interest rate rises in the United States. Brent crude futures had fallen 33 cents, which is 0.4%, to $83.70 a barrel, while U.S. West Texas Intermediate crude futures slipped 20 cents to $78.19 a barrel. Brent has jumped 6.7% so far this week, and WTI is up 6.2%, recouping most of last week's losses. In the metals market, gold prices ticked high on Friday, and we're on track for a fourth consecutive weekly gain, supported by a weaker dollar and expectations of slower interest rate hikes by the U.S. Federal Reserve. Spot gold was up 0.1% at $1,898.57 per ounce, and prices gained 1.8% so far this week. U.S. gold futures rose 0.1% to $1,899.60. The dollar index was on track for worst week since November the 11th, 2022. Of course, a weaker greenback makes the bullion more attractive to overseas buyers. And data on Thursday show that U.S. consumer prices fell for the first time in more than 2.5 years. It's time for a break now. When we come back, we stay on the African continent here on Business Incorporated. It's on Channels Television. Welcome back. Still watching Business Incorporated here on Channels Television. Let's start off in South Africa, where the energy regulator, NERSA, has granted Eskom an 18.65% tariff increase for the 2022 or 2023-2024 financial year. This will kick in from April this year for Eskom's direct customers. There's been reactions, of course, following this. We have Matt Kindiga now, who just spent some time in South Africa with his relative there, back in London now. But it's good to have a first-hand information from Matt. Hi, Matt. Happy New Year. This is the first time we're having you on this show.
That's right. Thank you very much for having me today, and Happy New Year to you as well.
Yeah, so Matt, it starts in April, but of course we've been hearing of load shedding in South Africa for some time now. First of all, just from your stay there, do you think people would not mind paying more if that will give them more electricity from your interaction?
Oh, yes, certainly. So I'm sure many South Africans would be very happy to pay more for power if they knew that it would result in improved electricity availability and a reduction in load shedding. When I was in South Africa over the last couple of weeks, I was quite shocked by how bad electricity shortages have become there. Every day we would have at least 6 hours of power cuts during the day and throughout the evening. So I think if these tariff hikes resulted in greater electricity availability, I'm sure there would be great enthusiasm or real acceptance of these tariff hikes. The question is whether or not this will result in an improvement.
Exactly, just what I wanted to ask you. Do you think the tariff hike will result to more electricity?
So in the short term, it's unlikely, although the tariff hike does provide welcome relief for Eskom's financial position. And this is because Eskom is looking to plug a massive fiscal or financial hole. It is very reliant on the central government for providing support to its financial position. And Eskom does face a number of financial pressures across several areas. So firstly, the cost of coal has increased very dramatically, and it is really struggling to fund the purchase of fuel to power its large fleet of coal-fired power stations. Additionally, it has a massive maintenance backlog, and this is one of the reasons why power shortages are so common in South Africa. A lot of power stations are breaking down because Eskom has not been maintaining its power stations correctly. It also has a very significant pressure to raise wages because inflation is running at about 7 or 8%. So it will probably provide a little bit of relief, but it's unlikely to result in significant improvements in performance, and this is because it actually requested a 32% increase in tariffs, and it only got about half of that. So certainly, it does need significantly larger resources to solve the electricity shortage problem.
So what do you think could be a more permanent solution to this Eskom and load shedding issue in South Africa?
So in a way, we're already halfway there in South Africa. So we do actually expect to see electricity availability improve in South Africa over the long term. And this is because the South African government in July last year introduced fairly sweeping liberalizations to the electricity generating industry. So previously there were quite significant restrictions on the role of independent or third party power producers in South Africa. And this was to protect the role of the monopoly Eskom. Now, officially, according to the law, independent power producers can produce an unlimited amount of power and sell it to consumers and businesses. This is very good, and we are expecting to see significant investments over the coming years in large-scale independent power production. However, it will take a number of years before this materializes. We would expect it to take at least 2 years before we see a meaningful difference in electricity availability in South Africa as a result of independent power production. And over the same period, we're going to see continued declines gradual but steady declines in electricity output from Eskom. So whilst independent power production will rise, at the same time, Eskom power production will fall. So as the economy gradually reduces its dependence on Eskom, we will see an improvement, but this will take a number of years.
Well, so South Africans still have to be a bit patient, with both Eskom and the independent power suppliers. But I mean, how do you see all of this affecting, at the end of the day, the economic growth, economic activities? It's a time of forecasts for different countries and the world. How do you see this affecting all of that?
Certainly. So South Africa's economic outlook is relatively muted, especially by African standards. We are forecasting growth of only about 1.7% in 2023, and we expect it to slow to about 1.4% next year in 2024. Electricity shortages are a major cause of this. So what we are seeing is South Africa's very large industrial sectors, so mining, manufacturing, construction, are in quite significant decline, and a large cause of this is electricity shortages. And this is a bit of a problem for the economy because not only are they significant contributors to overall levels of industrial activity, but also exports and employment. So a very significant source of employment, which then affects consumer spending. So electricity generation will significantly curtail electricity shortages will curtail economic growth prospects in South Africa and affect overall investor sentiment towards the market. However, we are seeing a few sectors that are doing very well despite this, especially services industries, financial services, ICT, and also a number of other industries as well. Services industries are doing very well. We're also going to see a bit of a rebound in tourism over the next year or so, which is very important. But overall, we are quite cautious in terms of the growth outlook for the market, and we are also increasingly cautious the longer we look out to the future, especially after the election in 2024, because that will generate significant uncertainty from a policy perspective. So a fairly sort of moderate outlook for the economy, one of the reasons being electricity shortages for sure.
Yeah, I would say 1.7 at Mart is really, really moderate, but we do hope it comes out of this in a short time. Thank you so much, Matt, and welcome back. Good to have you back on the show.
Thank you. Great to be back. Enjoy the rest of your day.
You too. All right, let's move over to Ghana now, where the president, Nana Addo Dankwa Akufo-Addo, has disclosed that the country is likely to get a full deal with the International Monetary Fund by next month, February. He said that as for the timelines, by the middle of February, the government will have a deal in place with the Bretton Woods institution. The government in December 2022 had reached a staff-level agreement with the IMF as part of processes leading to a bailout. Ghana is seeking to secure $3 billion from the IMF to complement the revenue shortfalls and service its external debts. The Ghana Boundary Commission has collaborated with the National Boundary Commission of Côte d'Ivoire to help fight illegal mining along River Tano. And the National Boundary Commission of Côte d'Ivoire has also said that it is prepared to share intelligence with Ghana to help devise strategies to fight against illegal mining activities. In Zambia, the finance minister said that the economy grew by 3.1% last year, but that the country should aim for higher growth in 2023. The Southern African country contained annual inflation to a single digit at 9.9% in December, up from 16.4% a year before that, before reducing inflation to between 6 and 8% in the medium term, because that remains the target. The central government's external debt rose to $13.36 billion at the end of September 2022 from $13.04 billion at the end of December 2021. European Eurobonds rallied after dissident Tigrayan fighters this week agreed to hand over heavy weapons, framing up a peace deal that may bring an end to the country's civil war. We do pray for that. They've agreed that China will cancel some of its bilateral debt. Ethiopia probably compressed on peace progress more than the China headlines, as said that fixed income portfolio manager and the ministers also met in Ethiopia officials' capital, Addis Ababa, in support of the peace agreement, which is currently driving bonds and the markets. That's the program for the week. Thank you so much for being a part of it. We'll start off again next week by God's grace. I'm Mini John Mekwa. Have a great weekend.